Guess what just happened on DXY? Look what just happened. I had this drawn out from weeks ago. Weeks ago. Demand on the DXY daily time frame. This is where we came, blow off top, right? So this is head and shoulders. Let me draw this better, motherfucker. Shoulder, head, shoulder. Nuke that shit. Shoulder, head, shoulder, right? Got the bounce off of the demand, pop back up, whoosh, broke right through the demand. This just happened last 1, 2, 3 days. Everything macro is gearing up insanely bullish for an alt season to come here very soon. This Dixie just broke down the US dollar. The US dollar starts breaking down, people flood into risk assets, and our risk assets become more valuable compared to the dollar because the dollar's worth less. Nuking. Look. Like I said, I had this demand zone. Look. So over here, it was demand. Over here, it was supply, overhead supply. We nuked off of it. Look, we nuked all the way down. Boom, 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 boom. So where's this coming down to? Maybe a little bounce right here. Whoosh. At the very least, down into here. Okay. At the very least. You get a move like that on Dixie, we're pumping, boys. We're fucking pumping. Look at this. I'm giving you the alpha. Dixie is breaking down. I even had it. I had this already drawn out from weeks ago. Breakdown here is bullish. 1, 2, as soon as we lost the demand, look what happened. Whoosh, whoosh. Nuking. We just lost this huge demand. Okay. So DXY is breaking down. Bullish. Give you one more point of confluence. You guys are going to like this then, huh? All right. Let's put it underneath. Let's do 10-year. Yep, right here. I still have my drawings. Where's my drawings? Where the fuck are my drawings? I had drawings for the 10-year. Let's do it like this. I don't know why it doesn't have my drawings, but fine. Fuck it. 10 years doing what as well on top of the DXY? 10-year bond yields are coming down as well. If 10-year bond yields, look, shoulder, head, shoulder, nuking. All right, a little bounce here. It's fine. Nuking. Why is that important for financial markets? If the U.S. government bonds, if the yield is going down on U.S. bonds, what's going to make countries that own these U.S. bonds want to keep the bonds? So I'll teach you how this works. So the reason the nuking of the value of the dollar is important is because everything is a pair trade. So if you own Bitcoin, you denominate Bitcoin in US dollars. So BTC divided by USD. Or ETH divided by USD. Okay? It's a pair trade. So let me put this up for you. Okay? ETH USD. So you denominated it in a US dollar. So whenever you have a fraction, you have a numerator and a denominator. The numerator is the asset on top, which is Ethereum. The denominator is the asset on the bottom, US dollars. So one Ethereum denominated in US dollars is worth how much? Right now, $2,100, right? $2,200. If the value in the denominator goes down, then the value of the fraction as a whole goes up. So if the US dollar is worth less in the bottom of the fraction, the asset is worth more, right? 10 divided by 2 is 5. 10 divided by 5 is 2. So if the denominator is a smaller number, right, 10 divided by 2, the fraction is worth more, 5. 10 divided by 5, denominator is a larger number, the fraction as a whole is worth less, 2. Okay, there you go, mathematics. Simple math. So as the value of the US dollar is going down, our fractions are getting larger. Our assets are worth more. Okay, good. 10-year government bonds. Why is this important? So if the yield on the US government bonds is going down, countries that do trade with us, for example, China, great example. China makes money by selling us a shit ton of products. We import products from them, okay? So China makes all this US dollars, all this money from selling us things, and they have this huge, massive pile of US dollars. And they say, okay, US dollars are a depreciating asset. They keep printing more, so the value of these dollars are going down. How do we want to hold our surplus US dollars? Well, there's a couple ways they can hold it. They can buy US government bonds, because if they buy bonds, now their US dollars are getting interest on what they're worth. Okay? If the interest rate that the US government is willing to pay on these bonds goes down, which it is right now, then there's less of an incentive for nations or major investors to own US bonds. Why is there less of an incentive? Well, because if they can get a higher yield, a higher rate of return on something like, for example, gold, which China is doing, importing a fuck ton of gold, buying a shit ton of gold to then spend their US dollars for, and obviously hold gold. Well, China is taking their US dollars instead of holding bonds and is putting this money, oh my goodness, fucking subscriber. If China is getting rid of all their US dollars because these bond yields are going down and saying, I can get a better rate of return by owning gold or by owning stocks and risk assets, what does that mean? All those US dollars are getting put into the stock market, are getting put into equity markets, into risk assets. Now you get all this new liquidity into markets that in turn do what? Raise the price of our assets. Beautiful. So this is why you want 10-year bonds, 10-year bond yields to go down, because then it incentivizes major players like nations or major investors to then rotate the liquidity out of these bonds and rotate them into stock markets, into these equity markets to then buy risk assets. They buy risk assets, prices go up, we all make money. Make sense? So everything is lining up for an incredibly bullish year. I don't think people are really using all these points of confluence to really understand what the fuck. That was just a ridiculous comment. There are so many points of confluence to show that, oh, we're going into an incredibly bullish period here very shortly. GLI is going up. The global liquidity is going up. Bullish. TGA, Treasury General Account, is about to get depleted. Bullish. Interest rates in the US are going to continue to go down. Bullish. DXY is nuking. Super bullish. The US dollar, the value of a US dollar is going down. People want to get rid of their US dollars and put them into risk assets. Okay, great. 10-year bond yields going down. Bullish. People don't want to hold government bonds anymore. Put their money into markets, into risk assets. Gold, silver, major corporations like Nvidia, Apple, Google, whatever. The forest through the trees. Remember to see the forest through the trees. So all these things are telling me, oh shit. Right? Shit's about to heat the fuck up. Okay? So you could call it, whoops. Tighten this up. Say, you could even say something like this. DXY already did it, but you get this on 10-year bonds. You popped back up, right up off the demand. Whoosh. As soon as you lose this demand right here, change this. As soon as you lose this demand, you're fucking cooked. You're coming all the way down here. Okay? You're going to retest this. That's where you're coming down to. Okay. And if you lose this, bumba clap. You're coming back down into here. Something like that. Back into this region. Bullish, 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 bullish. Understand? Okay. Now, that's macro. Short-term time frame. Did we go down a lot in the last couple of months? Yeah, we did. It's a local shakeout, local pullback. Shit happens. Okay? Shit happens. But that's where I see the market at right now. All right, gentlemen.